Mind fucking blown, man. Holy shit. This fucking cat, man. God damn it. We've got to talk about some stuff. All right, we've got to talk about some stuff. We're recording this on a Friday, October 29th, after the market closed. Folks, the portfolio is going giga bananas. That's bananas 10 to the power of 9. You can spell that BANANANAS. Give or take one or two bananas. Bananas? I don't know. So the portfolio is up 854% compared to the S&P, up 174%. Over this 8-year period, my net worth has cracked the 2 million mark just this week. Just this week, we cracked the 2 million mark. How incredible is that? All right, so we've got my portfolio pulled up on M1 Finance. We're up 14.71% for the week. That's over $220,000 in 1 week. Holy crap. Holy crapola. Holy Toledo scales. All right, so Giga Bananas is perhaps a smidge hyperbolic, but this feels good, guys. Basically, all of these gains are on the backs of Tesla shares. Tesla for the week up 22.5%. It's up $220,517. So the portfolio is actually down ex Tesla. Basically, it's flat. Fangy type stuff up just over 1%. Unhinged dividends, the big loser here, down nearly 4%. ETF machine almost 1%. Due to dividends up over 1%. And Lime Hedge down 1%. Fangy type stuff and due to dividends, did really well, generally speaking, not relatively though. But all of their gains thwarted basically by unhinged dividends. Yeah, so opening up unhinged here. Altria for the week down 8.5%. Comcast down another 5%. Starbucks down 7%. Altria and Starbucks both reported earnings that missed, while Comcast earnings actually, it went well. But investors are worried about the cable side of the business. Starbucks, let's pull up fast graphs actually. All right, so I switched over to fast graphs here. I've got Starbucks pulled up. Yeah, Starbucks is down quite a bit after earnings. It's showing 113 here, but we're actually closer to 106. But even still, this is a fast-growing company, but on a blended PE basis, it's more expensive than Google, which is growing faster and has better balance sheets. I mean, if Google wanted to, they could literally buy Starbucks, the entire company, with cash. Comcast is another one that's down post earnings. We're going to switch to that graph here in a second. Moving myself in the middle here. I'm going to shrink myself down a little bit. That looks better. So yeah, Comcast growing just as fast as Starbucks, maybe quicker. It's more recession resilient. You can see this dip here is the pandemic, no dip during the Great Recession. That is not the case for Starbucks. One caveat here is it is more capital intensive business. It's got more debt, but you're paying half price. Comcast on a blended PE basis is selling at half the price and growing just as fast as Starbucks. What do you do with information like that? I don't know. It's not financial wise. Just a guy with a lemonade stand. All right, so let's switch over to Altria. Altria is more interesting. It's been cheap for a very long time. My cat. God damn it. My cat. Okay. All right, buddy. Thank you. It's not growing like Starbucks or Comcast. It's growing about at half the rate, but it's trading at a blended PE below 10. It normally trades at a PE of 14. This is including many years of underperformance. So if you chop that off the chart, this could be trading at something closer to a 17 PE. And a simple reversion back to the mean presents quite attractive upside. I get, however, owning a tobacco company is not for everyone, and certainly not without its own risk. But analysts are super spot on with this company. So there shouldn't be any big surprises, hopefully. So the play here, what I'm doing is holding the stock until it catches up to earnings. I've been waiting quite a while. Hence, this has become such a large position for me. Jeez, dude, Altria is my fourth largest position. I never meant for that to happen, but I'm writing it out. The silver lining is that, while I'm waiting for that reversion to the mean, I'm getting paid 8%. Currently, the stock has 8% yield. It's incredible. Now let's check out Lime Hedge. The big loser in Lime Hedge is Alibaba. Alibaba's behind me. You can see it. There you go. Down 7%. I've been scooping up these shares almost every day. If you want to understand why, I'll put a link in the description, in the doodly-doo, right down, where I give my thoughts on it and I do some analysis. I also talk about Tencent and JD.com in that video if you have more interest in the China space. Let's go back and check out Fangy type stuff. If you take Google out, which was up over $4,000, then this sub portfolio is down to about $2,400 ex Google. Google up 7.5%. Microsoft up 7% also. Coinbase did well, 6%. Hold on, I gotta move me. There we go. Spotify is up 14% for the week. Or, put it another way, it's up 15 cents for the week. Talk about not moving the needle because I only invested $1. Why do I have $1 invested in Spotify and Netflix? That's a good question, if I do say so myself, and I do. In a previous video, I told you that I put all of my bills on one credit card, and that credit card pays me back in Bitcoin. Link down below. Well, now M1 Finance has a credit card, but instead it pays you back in stock. The catch being you have to be invested in that stock. That stock has to be in your portfolio. So now my Spotify and Netflix subscriptions pay me back 10% in Spotify and Netflix stock. Mind fucking blown, man. Holy shit. It's good to be alive. So this is a new feature. Not many people have access to this yet. Link down below if you want access. So you can see here, I have $9 in pending rewards. That's mostly coming from Tesla, actually. My girlfriend, she drives my car for work. She drives a lot for work. And when she charges at a Tesla supercharger, I get paid back in Tesla stock, 10%. 10% of the electricity charge is going into Tesla stock. Holy crap. If that sounds appealing to you, link down below. So anyways, that is why I have just $1 invested in Spotify and Netflix. Netflix was actually a significant position in this portfolio. Most of my shares were purchased around here, 2013, 2014. So you're looking at like $30 to $60, $75 a pop. I don't remember what my cost basis was. I think it was around $50. Those shares would be up 1,230% right now. But I exited around here in the low 500s, up probably 1,000%. Like right before this 34% run. Next is almost $700. Holy crap. I think the point is it's easy to get lost in your success, particularly when you have a week like this, up almost $250,000 in 1 week. It's just utterly insane to me. But what's most important is learning from both your success and your mistakes. Netflix, as much as Tesla, is a reminder. It's not about timing the market. It's all about time in the market. And on that note, I think we'll leave it there. My name is Nick. This is my lemonade stand. Thank you for watching. And if you've made it this far, I probably don't have to tell you to like and subscribe, right? Right? Damn it. You get it. You're one of the good ones. This fucking cat, man. God damn it. Oh, I almost fell. Holy shit. All right, I'm out of here.